Hi, everyone. Barry McGuire here for Barry McGuire's Creative Real Estate Education Series. It's the Monday main event. We talk about real estate and the creative side of it generally, although today we have some items that just are basic real estate things that we think are interesting to talk about. And so it's a series of tales from the trenches today. Donna hates it when I do that, but I love saying it. Tales from the trenches. It's like it's really serious, and it is serious. But before I do that, I just have to talk about a couple things. So we finally have some decent weather in Edmonton. I'm almost finished planting my garden. Got a little carried away, took things out, kind of mid-month when it snowed. My tomatoes got a little bit frostbitten. But everything's in the ground now, and it seems to be liking it. It's going to be 30 above for the next couple of days, so stuff should be popping. So I'm happy about that, because if my garden's going, it means the raspberries are going and the grapes, and that means jam. And of course, we like to give out the jam. You guys know that. And tonight, for any hockey fans, is Game 7. Montreal is in Toronto tonight, I believe. The Leafs, hate to say it for all you folks who are Leaf fans, they are so far pulling one of their epic collapses, up 3-1 in the series.
Okay.
Montreal, who doesn't have anybody who can score, beat them twice in overtime, and now it's tied 3-3. So I don't know what to say. We don't have anybody to cheer for in Edmonton. I'm looking for somebody to cheer for. Anyway, see what happens in that series. All right, so tonight we're going to talk about a number of things. We're going to talk about a little bit about insurance, which is a lead into next week when we're going to have Steve Hambley on from Sadler Insurance, who's going to talk about insurance from a whole bunch of different angles. But I've got a few things I want to talk about on the insurance side of things today. We're going to talk about what the market is like in terms of busyness. How busy is it, and what does that mean? How does that affect you, or does it affect you? We're going to talk about kind of an offshoot of busyness, and that would be what happens when you have a contract and all of a sudden the seller goes, you know what? I've got a better offer. I don't think I like your offer. I'm gonna sell it to somebody else. And Andrea Workington has run into a couple of those situations, and I'm hoping Andrea is going to be on a bit later. She's finishing off a couple of things, running a bit late, so I'm going to get started, and then Andrea will join in. So I'm going to wait on those two things where folks may not want to close till Andrea shows up, and I want to get her take on it, and then we can get into some of the whys and the wherefores of what do you do? Somebody says they don't want to close. So let's start with busyness. So what can I say? It's busy all across the country. It's hugely busy in Ontario, and not just in the Golden Horseshoe like it used to be. It's busy all over Ontario, almost all over Ontario. It's busy in British Columbia, not just in the Lower Mainland, but almost everywhere. I mean, it's busy. It's busy in the Maritimes. New Brunswick and Nova Scotia, especially PEI. I'm not sure about Newfoundland, but the other three maritime provinces are very, very busy, busier than they've been in years. Prices are way up. People can't believe it. And so it is busy. Example, we were looking to help a client purchase a property, getting a new Royal Bank mortgage. That's Royal Bank of Canada, Canada's biggest bank. And it's 2 or 3 days before closing, and we don't have any mortgage instructions from Royal Bank. We know these folks are fully approved because we have a commitment letter that says they are. No mortgage instructions. So we're writing to Royal Bank, we're asking, we're faxing, and then the Royal Bank mortgage rep for this particular buyer said to us, here's the story. Normally, Royal Bank gets 2,000 to 2,500 mortgage applications per day across the country, per day. That's a lot, don't you think? 2,000 to 2,500. But right now, in this time of busyness, they're getting, are you ready? 8,000. 8,000 mortgage applications per day. And so Royal Bank is saying, you lawyers don't even expect those mortgage instructions until 5 days before closing. And they're not meeting 5 days before closing. Mortgage instructions are showing up, not just from Royal Bank, because everyone is busy. We are not seeing mortgage instructions now until a day or two before the closing date. So what are mortgage instructions? That's the bank writing to me as the lawyer saying, okay, Barry, you're the lawyer. Here's what we're giving these people for mortgage. Here's the list of 15 documents and 25 things that you need to do, and get going, Barry. So normally what we say to people is a normal timing closing is when we have those mortgage instructions 2 weeks before closing. 2 weeks. That means that in a normal, without killing yourself kind of way, we can get it, we can look at it, we can do all the things the bank wants us to do, prepare all the documents they want, organize something with you, the buyer, get everything all signed, organize the insurance, give everything back to the bank, and ask for the money. And normally we think 2 weeks is normal timing. When they're making us do it in 1 day or 2 days, guess what? It drives everybody crazy. It drives us crazy because now everything we do is on a rush basis. Everything's on a rush basis. And when things aren't going the way they're supposed to go, we're getting calls from our client, from the realtor, from the local mortgage broker, from the other lawyer, wondering if we're closing on time, and we have to go, well, sorry, we don't have mortgage instructions yet. So that is just one aspect of what busyness does for banks. It makes them really slow to give us mortgage instructions, and it makes it really hard for us to close on time. And that notion of closing on time is going to work into the conversation that we have when Andrea comes on about what do you do if somebody says they're not going to sell to you. So the other thing that busyness does, there's a few things that it does, but one other thing that busyness does is it affects us on the selling side. So we just talked about the buying side. We're helping somebody buy. We need those mortgage instructions. We're not getting them till 1 or 2 days before closing. If we're helping you, say you are selling a property, and we're helping you sell, and you've got a mortgage on your property, we have to write to your bank and we have to say, give us an official payout statement for, say, June the 1st. We need to know how much money it will take to pay out that mortgage on June the 1st. The reason we need that is because as the lawyer for the seller, we have to promise the buyer's lawyer that we will clear the seller's old mortgage off the title. So in order to know whether we can clear it off the title, we have to know whether we're getting enough money from the sale to actually pay the bank and get rid of that old mortgage. And to be sure of that, we need the payout statement. Well, guess what? Because we're dealing with banks who are very, very busy, when we order up those payout statements, we're getting those a day or two before closing, or on the day of closing, or not at all. So right now, we have a whole pile of deals closing on May 31st and June 1st, and we have about, I think, 10 sales that we're closing. And on 6 of them, we have written for the payout statement as on the seller's behalf, and we don't have the statement. We are calling, we're writing, we're asking our client to get hold of their personal representative at the bank to see if they can pry a statement out. So if we can't get a payout statement, we can't close the deal. And we know we're on both sides of the fence. Sometimes when we're acting for a buyer, we hear from the seller's lawyer to say, well, we can't close the deal because we can't get a payout statement, and we're on for buyers and have to say that as well. So in a nutshell, things are busy. Things are busy. It's so busy, even in Alberta, that you can't even ask anybody to put a rush on it. Sometimes if you need to do something quickly, you say to whoever you need to work with, the appraiser, the banker, the realtor, the insurance guy, I need that right away, so put a rush on it. Well, folks, it is busy enough that nobody has any more room to put a rush on it. They're already rushing as quickly as they can. So that's my comment on busyness. And so what does that mean for you? What can you do about that? Well, depending on what side of the fence you're on, if you happen to be selling, you could order a payout statement yourself. Let's say you're planning to sell. You're going to list your property on June the 1st with your realtor. Things are popping along pretty good, so you're pretty confident you're going to have a sale for, say, July 1st or August 1st. You could order a payout statement from your bank. And they'll give you one. And even if it takes a month, by the time your sale closed for July 1st, you would have one. If we hear about your sale that's closing on July 1st, if we hear about it on the third week in June and we order the payout statement, we may not have it for the closing, but you would have it, and that would be very useful and we could close. If you are buying, you can start your mortgage process with your mortgage lender the minute you know you're going to go look for a house. Figure out who your lender is going to be, or your mortgage broker. You might be better off with a mortgage broker, perhaps. Sometimes they have better contacts with lenders. If things are delayed, they can kind of get into the back office a little bit easier. But you can start that mortgage approval process with your broker right away, the minute you think you're going to buy a property. And you can talk to your broker and say, I know what you guys usually do is do a pre-approval. I mean, you look at my income, you look at my situation, you analyze, and you kind of give me a rough idea of how much house I could buy, how much mortgage could I qualify for. And then, of course, when you actually find a house, then you have to submit a formal mortgage application. But what you could say to your broker is, listen, I know it's busy. I don't want to miss out on this because I can't close. So let's do more than just the pre-approval. Let's figure out what you're going to need from me if I do actually buy a house, so I can start working on all of those things that you will need in due course. And that might be your T4s, your notices of taxation, employment letters. It could be a whole bunch of things. There's always a shopping list that your mortgage broker lender wants. And you could go, listen, I want to be pre-prepared. I want to deal with the fact that I know everybody's really busy. I want to give the lender the extra time they're going to need to get me approved. So you could do that with your broker. Anything that you can do to give yourself more time. Try and get more time on your offer. I know in a busy market, if there's multiple offers on a property, sellers will take the one that closes fastest and gives them the most money and has the fewest conditions. So that puts pressure on you as a buyer. I know in Toronto, I heard today on the news that buyers are getting limited house inspections, if they get an inspection at all. They're essentially buying without an inspection, which in Toronto, where there's lots of old properties. How about this one? This is just a little aside. Folks were buying half a duplex, a semi-detached Victorian-style house in Toronto, built in 1888, I believe, 1888. Okay, so I can't even believe this. The lot size is 18 feet. It's 18 feet wide by 77 feet long, and there's no parking. You got to park on the street. There's a pretty standard lot size in Edmonton that's 50 by 150. They're not all that big, but you can get lots of those. This is 18 feet wide and 77 feet long for $2.8 million. $2.8 million. Do you think a house that was built in 18 1888 or 1890 might have a few inspection issues that your inspector would like to advise you on and that you would like to know about. Well, guess what? Offers came in unconditional on financing, unconditional on inspection. So, but you can try. You can try to get enough time to close from your seller. And what I recommend for sure is that you give yourself, I would try for 3 weeks for conditions. I would try for 30 days for conditions. And the standard conditions are home inspection, satisfactory to the buyer, and financing satisfactory to the buyer. And then I would try for another 30 days to close after that. And I know, in a busy market, sellers don't want to give you that amount of time, but if you don't ask, you don't get. And don't expose yourself to closing without that valuable information, and you may regret that. Now, let's see if we have some questions here. All right. Let's see, Donna, I had a question disappeared. So the question that I'm reading is, does that affect an AFS agreement at all? Being I could only imagine how busy you could become with 5 days to handle standard mortgages. That's a really good question on the creative side, because AFS takes more time than a regular deal when things aren't busy and aren't rushed. It takes more time anyway, and the reason is that it's an AFS, agreements for sale, or RTO or wholesaling are unfamiliar strategies to many people. They're unfamiliar to realtors, unfamiliar to lawyers. And so I would say, doing an AFS takes double the normal amount of time anyway. So my coaching on AFS deals is you should have those close a couple of months after you go unconditional. So yeah, it's even worse when you're doing an AFS, but that's not because of general busyness. That's because of the way an AFS is. I don't think the general busyness that we're experiencing now makes an AFS any worse, or not very much worse. Sean says, I have a refinance that was submitted at the end of April. Still no docs from the lender. Oh my God. Well, I'm not worried about that because Sean's our ace mortgage broker, and I know he's got all the keys to all the back doors, and he's probably just going to get right in there and sort that out. Right, Sean? Jared says, I'm learning this firsthand. My most recent deal had a week and a half for conditions. I won't do that again. Yeah, Jared, you're right. You're right. A week and a half is not enough in good times. I think it's a minimum 2 weeks for conditions when things are quiet and nobody's rushed. But in busy times, I know. Sellers don't want to give you that time, but you have to decide how much risk you're going to take if you don't give yourself enough time to do the appropriate amount of diligence. And there's lots of diligence to do. So there you go. That's just a bit of a comment on diligence. If you've got, I guess I could add one other thing. I heard from one of my realtors today telling me that they were trying to help a client where the seller was acting for himself. That always complicates matters. He didn't want to have a realtor or probably a lawyer. But in any event, my realtor's buyer client needed to get a CMHC mortgage. He needed to get an insured mortgage. And their application was to CMHC, which is Canada Mortgage and Housing Corporation. And CMHC turned down the application. They were a little uncomfortable with the buyer's financial capability, and they also thought that the buyer was overpaying for the property. And so they just refused to insure it. So the backup there is to go to one of the other insurers for the National Housing Act. And there are a couple of other insurers. CMHC does the lion's share of the business by far, but Genworth is another NHA, National Housing Act insurer. And so they had to go to Genworth to see if they would insure it. And that is going to add now another 10 days to 2 weeks worth of time, and the closing is tomorrow. So the seller is very unhappy that the buyer needs a 10 to 14 day extension. So if there's if there's a National Housing Act aspect to this, and I appreciate for most of you as investors, you won't be doing CMHC or other insured mortgages, but you might. I mean, you can get those kinds of mortgages under the CMHC program, but any little wrinkle can add complexity and time. So give yourself time, because if you don't, trouble. And we'll get into some of the other aspects of what might happen if you can't close on time when Andrea comes on.
She'll be there shortly.
And I know she's going to be on shortly. So the next one we're going to talk about just in a little bit today is insurance. Insurance. We buy properties, we need to get them insured. If we buy a 3-bedroom bungalow, what we call a lot, block, and plan property, because that's the way the legal description is, lot so-and-so on block so-and-so on plan so-and-so. You have to, if you're getting a mortgage, you have to get insurance. If you're fortunate enough to pay cash, you'd be foolish if you didn't insure it on your own. If you're getting a mortgage, your lender will make you get insurance. If you're doing it on your own, you don't have to, but obviously it's silly to not have your property insured. So here's what's going on with insurance. Insurance markets vary in a cycle between a hard market and a soft market. When it's a hard market, insurance companies are not, they've experienced bad claims in the few years before you were looking to get your policy. Their premium income hasn't been enough to make things profitable for them, or not profitable enough. So they talk to their analytics people, their accountants who specialize in analyzing numbers. And they look at it and they go, you know what, we're not making any money here. So the answer is we have to either get into less risky lines of insurance where we know we're going to make money, or we have to raise our premiums. We have to raise our premiums. And so Canada has experienced very difficult, certainly weather conditions over the last while. And insurance companies say that their main concern is now turned from fire damage to water damage. And in that regard, in Alberta, we had the big ice dam in Fort McMurray last year, which caused a whole bunch of trouble. The whole downtown of Fort McMurray was underwater. We had the floods in Calgary. We've had this Slave Lake and Fort McMurray wildfires. We've had some tremendous hail damage in the southern part of the province. And so just in Alberta alone, I think we've experienced the worst claims experience for insurance companies in a long, long time. Exacerbated. So that means claims are up, and that means that if they were charging last year's premium, they're not making as much money. The other thing that insurance companies do is that they make money on what they call their float. So every year they look at how much money they think they need to put aside to pay claims, and they invest that money. They invest it in stocks. They invest it in other investments that make them money. And they do that believing that if there's a claim, they'll be able to cash in those investments and pay those claims. So they call that the float. Warren Buffett, the Oracle of Omaha, as they call him, sometimes called the world's greatest investor, built his company, Berkshire Hathaway, off investing the billions of dollars that he gets from on the float from the insurance companies that he owns. But guess what? Along with other issues, bad claims that are going on, insurance companies are finding that their normal investments are not paying them properly. So they're very conservative. They don't go investing their float in some wild scheme to find a gold mine off in the wilds of Patagonia. They don't invest in Elon Musk commercializing tourist trips to the moon. They invest in very, very conservative things that they're pretty sure are always going to pay off for them. And with today's low interest rate environment, that means that what insurance companies can invest in is not paying them very much. So between rising premiums and a lower returns on how they invest their float, insurance companies are hurting. And so it is now not just a hard market for insurance, it's a very hard market for insurance. So let me give you a personal example. Donna and I own a little fourplex over in the Bonnie Doon area of Edmonton. Beautiful little fourplex, well maintained. We've never had a claim with our insurance company. And when we bought the place, I think about 5 years ago, so we're still investing, folks. We don't just talk about this stuff, we actually do it. When we bought about 5 years ago, the premium for our fourplex, the fire insurance and other insurance coverages, was about $2,700, I think. The next year, in year 2, it went to about $2,800. Then in year 3, it went to $3,200. In year 4, which was last year, it went to $5,100. And this year, our insurance agent called us up to say that the premium that the insurance company wanted was $7,800, and he managed to convince them to charge us only $7,100. So in 5 years, the premiums have gone from $2,700 up to $7,100. And that is what's happening across the board. That isn't just Barry and Donna in Edmonton with their fourplex. Insurance costs are going up across the board. Hi, Andrea. And just finishing off a section on insurance, and then we'll move over to talk about FSBOs and greedy sellers. That'll be fun. So back to the insurance side of things. So premiums are rising across the board in all areas of insurance. We had a client buying a property. Let's see. Last week, they were buying a 20-unit apartment building, and the insurance company, the insurance agent, said that he could only find one insurance company who would insure that. He said that other companies had decided that they didn't like older wood frame apartment buildings. They found there were too many claims, too many water claims, especially leaks and things like that. And so they just weren't insuring that. They just weren't. There are condominiums now, certainly if you're in Fort McMurray or Slave Lake or some places in Calgary, if you own a unit in a condominium, condominiums are finding it difficult to get insurance. And I understand that for a really shocking example, there's a brand new apartment condominium in Edmonton called The Pearl. It's on Jasper Avenue, which is the main street in downtown Edmonton. It is, Donna, how tall would you say The Pearl is? 40 stories? 60?
I don't have a clue. I don't know.
It's tall. So The Pearl is located on what used to be the flyway to Edmonton's municipal airport. But now that we don't have a municipal airport anymore, you don't have to have those height restrictions. So it's the first really, really tall apartment on Jasper. And it's at the luxury end of things. But I understand they've had enough bad claims experiences with their insurance company that their main insurer said, you know what, we're out. We're not going to insure you anymore. And I believe they have solved that by finding another insurance company, but their premiums are way up. So across the board, insurance is tough, hard market. So what can you do about that? Or is there anything you can do about it? Well, because insurance is so important, when you're buying, you can insert a clause in your contract that says, subject to buyer obtaining satisfactory insurance. Subject to buyer obtaining insurance satisfactory to buyer. You want it to be a subjective phrasing of that clause, subject to buyer finding insurance satisfactory to buyer. And then as part of your diligence process, you would talk to your insurance agent and go, okay, I'm planning to buy this. I need to know that I can get insured. I need to know what the coverages are, and I need to know what the premium is going to be. And if your insurance agent comes back and tells you that the premium is going to be 3 times what you thought, and that throws your cash flow completely off, you might have to reconsider buying that particular property. So you can put that in a contract so that you know about it and you're dealing with it before you're committed to the buy. Because if you don't do that, and then you're just going through and you're getting your loan and your bank says, okay, well, you have to give us proof of insurance, and then you get the bad news from your insurance agent that it costs 3 times as much, well, you're caught, aren't you? And you just have to pay the premium or lose the deal and lose the deposit. What else can you do? I mean, I reckon that as you do your budgeting, I mean, my fourplex has had 5 years of increases, with 3 major increases over the last 3 years. Is that going to change for next year? Who knows? But if the trend is up, I think you have to plan and budget for more money for insurance premiums. So I think you should look at properties that you already own. You should look at the trend for policies for your properties. You should consult with your insurance agent and ask them about the trend, what they're seeing. Is this just Barry flapping his lips in Edmonton, or is it happening in Hamilton or Cranbrook or Halifax? Find out what's going on so that you can budget. And then I don't quite know how to do this. As landlords, what we want to do is pass those costs on to our tenants and continue to have positive cash flow properties. So you have to think about how you're going to introduce the notion of a rising rent because of rising insurance costs. And of course, if this is across the country, like I say, you won't be the only one. But I think there's a lag. Like right now in my fourplex, I don't know that I can raise the rents to. I don't know if I can raise the rents to cover the increased premium. I'm going to have to sooner or later, but you should consult. Question: what would you say the average premium jump is right now? Well, I only know about my own premiums, and I only know anecdotally. But since we have Andrea here, Andrea, do you have any comments on rising premiums and insurance generally? What have you run across? You own the odd property. You must have seen some of this.
Yeah, I have seen some, but it hasn't been all that bad, to be honest. And I think there's some things maybe that for me, I'm a little bit different than other people because I tend to have a lot of my properties on one policy. So that way you pay less when you have it all on one policy. So for example, if I was to get insurance just on one vacant property, which I have, in Cranbrook with my development project where, there's service lots. So if I just bought one, it was $600 per, for that one lot for insurance for a year. And there's nothing to insure other than liability, right?
Yes.
But as I got more, the price came down so that I'm basically only paying $125 a lot. So because it's all on the same policy.
Okay.
Right. So when you combine stuff, and we do the same thing for some of our multifamily projects, is we combine a bunch of buildings on one policy. We save a lot of money that way.
Yeah.
Now, the flip side is if you have, a claim, it affects all the insurance rates for everything under that policy.
Yeah.
So,
Yeah. Never a free ride, is it?
No.
No. So if you haven't noticed as much of a premium increase, I mean, it could be because of the way you handle your insurance. It could be because there is kind of localized underwriting. I don't know that that folks in all other areas of the country. I mean, if you're with any of the insurance companies, I mean, do they assess risk the same in Newfoundland as they do in BC, as they do in Manitoba, as they do in Alberta? I mean, are the rates all set the same? Or maybe they look at Red Deer and go, Red Deer is such a nice, quiet town. We never have any trouble in Red Deer. That's where Andy lives, right? Red Deer, Central Alberta. So maybe that's true. So you got to talk to your agent maybe and get some other coaching on that.
Yeah. And you know what? All my insurance is with the same guy. So I deal with Hub. They have a RAIN program through their Ontario office. So I deal with a guy named Dan Tetzlaff, and he's been fantastic over the years. And so I've sent a lot of people his way because they are so reasonable, because they've got the whole buying power of all these landlords together,
Yes.
Whereas you go to your local insurer, they're like, well, they will insure an investment property, but it's not really their bread and butter. Whereas Dan's team, they negotiate based on, the portfolio of probably 100 million, 200 million, 300 million, however much it is, right? And so there's power when you have a huge group whose policies are being negotiated on. So
buying power. So I've talked to Dan. He's a great guy to talk to. So that's Dan Tetzlaff. Is that Tetzlaff? 2 F's? I can't remember.
It's Tetzlaff. Yeah.
FF. And that's Hub International, and Dan's in an Ontario office.
Yeah.
So if you're looking for him, you can. And if you belong to the Real Estate Investment Network, RAIN, if you were a member, if you've got any other affiliations,
he'll take you.
I think Dan will help you out because he does understand the investment side of things. So you might be able to get the best bet there.
Yeah, exactly.
Should someone anticipate crazy premiums on a fully renovated property as opposed to an older rental? What do you think, Andrea?
Usually it's less, actually, because now they know all the plumbing is up to date, all your electrical. Like if you were to take a 100-year-old building and it's still got knob and tube wiring, good luck on that. Whereas if you've replaced everything and brought it up to a much higher standard, that's really what they prefer. And, one of the things we've noticed more recently is they're getting really sticky on things. So, for example, one of my owners has to have all of his furnaces checked, because if anything's older than 20 years old, they're looking you have to have it inspected. Otherwise, they may ask you to replace it. A 20-year-old furnace.
20 years old, geez.
Yes, there's still a lot of life in that.
Yeah.
There, right?
Furnaces are just getting started at 20 years.
Yeah. But now we have to pay a plumbing and heating company to literally check every furnace of his. We had to drop off, make sure that every unit had a fire extinguisher. We had to make sure that we either had professional snow removal, or in a fourplex or multifamily, that we had one person who was in charge of the snow removal. One person, one tenant who was committed, and I had to send that tenant's name, like I had to prove that there's somebody looking after this for this owner.
Yeah.
So it's really getting a lot stickier. That's what I've noticed. And so, they want people to bring the standard of the property up. They want it to be running smoothly.
Yeah. I mean, I totally agree that newer with better information is going to be better than older with no information. I mean, as I said previously, there's many an insurance company that's exiting the small wood frame, older multi-building space. And a big part of it is older. So I think new will be better in terms of your premium and the hoops they make you jump through. All right, Andrea. Now, I have trouble keeping track of the hats Andrea wears because I think she must have a milliner in her background. Milliner is a hat maker. So Andrea is now a licensed property manager. She's a licensed realtor. She's, of course, a demon investor and coach in her own right. She's a developer. She's an international businesswoman. one of her other guises. Have I missed anything?
Salsa dancing.
A salsa dancer. Not sure how that fits into investing, but salsa dancing is lots of fun for sure. So Andrea, you got in touch with us earlier this week about some situations you've been running into. You have clients, or you've heard of situations where buyers are dealing with FSBOs, that is for sale by owners. We abbreviate it FSBO. And so somebody's selling on their own without a realtor, that's a FSBO. And so tell all the folks what the story is. What did you run into?
Well, I had two different calls, and one of them came through the Alberta landlord community. It's a Facebook group where people can post their questions. And there was a gentleman there that was posting about how he had a property under purchase contract with in Calgary area, and that the seller had emailed his lawyer to say that she wasn't going to sell the property to him, and they were supposed to close in 3 days. So this was a fully unconditional offer. And so he was asking for help. He had no idea what to do. And so somebody suggested he talk to me. So I had a conversation with him. I mean, I'm by no means a lawyer, but I know that certainly you need to file a caveat to protect your interests so that this seller could not sell to somebody else while they got this situation sorted out. And to make it super complex, in talking to him, what had happened is this lady had signed a 3-year lease with a company that does sandwich leases. So they look for rent-own clients. And so she had signed this lease with these folks and given them the option to purchase. Now, the folks who did the sandwich lease, they found somebody to do the rent-own, and it fell through at whatever point. I don't know how many years they were into this. So what they did is they found somebody to buy it. And so now we've got all these different parties involved, because we've got these sandwich lease people who have the option to purchase it, but they didn't follow through on it. And so they connected the buyer and seller together. And I'm not sure, it wasn't quite clear to me if they were making some money in between or what had happened, because I'm sure they negotiated price based on 3 years ago, not what the property was worth today.
Sure.
Right? So with that, I said to the gentleman, well, why do you think that she doesn't want to close? And he said, well, I think she wants $5,000 more than what we negotiated. So I think what happens when people start to see the market move, they think, well, maybe I'll just sell the house myself and save some money. Now, in this case, there was other people at play, and maybe she didn't really understand what her property was worth. And it sounded like it needed a bunch of work. So that's kind of sometimes a moving target, depending on the amount of renovations that need to be done. But in any case, she signed an unconditional offer, and she didn't disclose to the buyer who her lawyer was. So unfortunately, they had no idea who to contact. No. When you don't know who the seller's legal representation is, and there was no realtor involved. Mm-hmm. And so, he did end up filing a caveat, and I haven't heard what's happened, if anything, but he was beside himself because he'd signed mortgage documents and, given a deposit and all these things. And so I think when you're in a hot market and you're dealing with somebody who's unrepresented and maybe not that sophisticated, somebody probably said to this lady, you sold your property for what? And it doesn't mean that they know what they're talking about or they know the whole scenario or situation, but you need to be very careful. And my advice to you is, if you're dealing with for sale by owner and you're getting yourself a good deal, and they, I would file a caveat right away. I wouldn't wait to close, because people change their mind for whatever reason. And this is when greed kicks in. So if you've gone to all the trouble and effort to get financing in place and you're supposed to close 3 days from now, that's not very good. It's not a good way to do business.
No, not a good way to do business. So I think there's a couple of nuggets in there, and one of the big ones is, as you mentioned, when markets start to heat up, when prices really start to move. If people have been sitting on the sidelines and they're selling, they're finally able to sell for what they paid for it, or they can make a bit of a profit. Greed does set in, and sometimes people they just don't want to close, and so that happens in a rising market. So, just going to look at this question: what could you put in the contract to avoid this from happening and being sent down the caveat route? I don't know that you can put anything in the contract that would effectively make the seller not be greedy. I mean, if they want to be greedy, they can be greedy. If you have a fully signed unconditional contract, that is your best protection, because if you have that, then the seller just can't change their mind. They just can't say, well, I'm not selling to you. If you have that properly signed, properly done, all conditions are removed, no holes in it contract, then as a buyer, you're in pretty good shape. So as Andrea says, in busy times, when markets are really rising, it might be a good idea for you to file a caveat against the title. And the caveat would say, hey, I'm Barry McGuire, and I'm just giving the whole world notice that I am a purchaser under a real estate contract to buy this property. So if anybody else is looking at the property, they know Barry already has a deal going on. And so that would really fend anybody off. If anybody looked at the title and looked at the caveat, they would probably not be submitting a competing offer. So folks, filing the caveat is the way we do this in Alberta. It's the way we put a notice against the title for a claim we have against the property. In this case, it's a buyer's claim that they are a purchaser with a signed contract. You can also use the caveat to file that you have an option. And in Andrea's example, the sandwich lease people, if they were doing their end of it properly, they probably should have filed their own caveat against that title, saying, hi, we're XYZ company and we're claiming an interest because we have an option to buy this property. So when you talk about diligence and things that people might do, and we've done a couple of these Monday main events on diligence, and one of the things we talked about was, if you're serious about buying a property, you can get a copy of the title. And I mean, you don't get a copy of the title for every property you're just thinking about. But if you're going to put in an offer, I say get a copy of the title. And likely, if they had of, for the one Andrea was just talking about, they would likely have seen that there's a caveat filed, and they would get a copy of it and they go, what? What do you mean somebody else has an option to buy this property? So in a busy market, you might consider filing your caveat against the title. In other provinces, every province has their own way of putting this notice against the title. If you have an interest in a property, there's a way to do it. We call it a caveat in Alberta. In Ontario, there's a notice provision you can do. BC has their own. Every province has their own. Talk to your lawyer about filing something. Yes, Donna.
Sean MP asks, how soon does this caveat show up on title?
Sean MP says, how soon does the caveat show up on title? Depends, again, what province you're in. If you file a caveat, if you file anything against the title, in Alberta, we now can look at the queue, as they say it, the pending queue. What is in the queue to be registered against the title? So you might pull a copy of the title, see there is nothing against it. You might look in the queue at the land titles office to see what, if anything, is in the queue. And if you saw something in there, you can dig deeper and you'd likely be able to figure out what it was that somebody else was trying to register against the title. So, Andrea, was there another example that you ran into, or is this just the only one?
So I have another example of a lady that was purchasing a multifamily building. And again, it was like a week before closing. And the seller just said, I'm not going to sell. And so we go through the whole process again of suggesting to file that caveat. And she was working with a lawyer, somebody that Barry knows, one of your associates. So Barry might already know this story. But when I asked the buyer why she thought it was, she said the seller mentioned something about a mortgage. She would have had to pay quite a large penalty and she wasn't aware of it. So kind of through maybe presupposing a few things, and I don't know if this is 100% the scenario, but when people have what's called a blanket mortgage, it's a mortgage on more than one property, but it's just one mortgage. And the security is several titles or several properties, as in this example. And so if you're going to sell one of the properties that is the security, you're now technically breaking that mortgage. That blanket is now broken. And so there can be quite high fees for that. And that's probably something Sean could speak to more, or Barry, but we supposed that this was part of the problem. And it may or may not be the actual answer. We don't know. They're still trying to work through it with the seller to come to a resolution. But for whatever reason, she wanted as well to delay the sale by a month. And the seller also had another commercial property that this client was going to buy, this buyer was going to buy at the same time, but they had different closing dates. So she said, no, I don't want to sell it now. I want to sell it 30 days from now. And my buyer was like, but I've already got everything organized. Like, what difference does it make? So instead, the seller should have been a little more clear or figured out that when you break the blanket, it's going to cost you money. And so that's kind of what we presupposed from the situation. Is it was going to be a rather large payout penalty that the seller hadn't anticipated. Yeah.
Well, on blanket mortgages, if we take an example, and let's say that the seller has a blanket mortgage and it's $2 million, and it covers say 4 properties. Covers 4 properties. It's a $2 million mortgage, and they want to sell one of the properties, and it turns out it's the biggest property, and that property is like $1 million. It was $1 million of the blanket. If they want to sell that one property, what they need to do, as you say, they have to break the mortgage. But more technically, what they need to get a partial discharge of that blanket mortgage. Because if the mortgage is on 4 properties and they want to sell one property, they have to get a partial discharge that will get it off the one that you want to sell. And unless the mortgage itself says that the owner has a right to get a partial discharge, then you're completely in the hands of the mortgage company about whether or not they want to give you one. If they say, well, selling this property takes away way more of our security than we're comfortable with, so no, we're not going to give it to you. So, I mean, again, you might be able to find that out by getting a title search. And if you looked at the mortgage that was on there, and people don't normally do this, I know that. You might look at a title and see what's registered, but it's rare for people to dig down in and get a copy of the mortgage and see that it's a blanket mortgage, which would lead you to a whole bunch of other different things. So, this doesn't sound like greed as much as a seller running into some unexpected financial costs that they wanted to try and organize in a different way. But nevertheless, there you are, ready to close, and the seller's going, I don't want to close. So, what can we say as sort of general advice? One thing you said, Andrea, is file a caveat in Alberta or file a notice in other provinces right away if you're a buyer. And I think in a busy market where prices are rising, I think that's a good idea. We used to limit that to longer closings. If you've got your deal and it's not closing for 6 months, for sure you should file a caveat or notice against the title, because a lot can happen in 6 months. Sellers can change their minds, gives them room to have seller's remorse, I guess, instead of buyer's remorse. So you can, number one, consider filing that caveat or notice against the title right away. Don't wait. What else can you do? So you can make sure, especially when you're dealing with a FSBO, with a for sale by owner, you can make really, really sure that you have a solid contract in place, properly signed. If there are conditions, make sure that you remove your conditions when you're supposed to, because as Andrea will tell you, Andrea, is there not a clause in the contract that says, if I have until 5 p.m. on June 1st to remove conditions, what does it say happens if I don't do that by 5 p.m. on June 1st?
Your contract expires.
Right. And I think it's pretty prevalent for people to go, oh my God, my condition removal date's coming up and my lender hasn't quite given me the okay there. I don't have the unconditional mortgage approval, but the seller's been really good. And I'm this close to getting my approval. So I'm sure nobody will mind if it takes me until June 2nd. And so you don't take your condition off. Prices have been rising rapidly. That nice seller has been sitting in the weeds. And at 5:01 p.m. on June 1st, it's too late for you to take your condition off. And if the seller doesn't want to be accommodative and give you an extension, they don't have to. Sellers don't have to give you one more minute than either the closing date or a condition removal date. So make sure that you have a proper signed contract in place. And, if you had a realtor like Andrea helping you or any other competent realtor, they would make sure you had a signed contract. And then make sure you meet your dates. Make sure you meet all the condition removal dates. Make sure you meet your closing date. Sometimes sellers don't say anything. They might not want to close because they could sell to somebody else for $50,000 more, but they've been around the track a few times. They know you're sketchy in terms of financing, and maybe you're going to have some trouble because you've needed extensions. And they're going, if I just sit in the weeds here and wait, I'm guessing they won't be able to get their financing. They'll need an extension, and then I'll pounce. So you can have a good rock solid contract. You can file a caveat, and you can be ready to close. Something else you can do is, if you have getting any of this back talk from a seller that they don't want to close, come the closing day, unless the seller has said, you know what, you can take me to hell and back, I don't care, I'm not closing. If they haven't been quite as specific as that, then what you can do is you can tender documents. You get your lawyer to write a letter to that other seller's lawyer or to the seller personally. You go, you know what, we're the buyer and we are ready, willing, and able to close on the closing date. So we want your paperwork and you got to get it over to us. So if the seller still then resists and says, I'm not closing, if this ever ends up in court, judges look very carefully and influentially at, was the buyer ready to close? If you couldn't get a mortgage, you couldn't close in a month of Sundays, and the seller refused to close, the judge might say, well, so what? Buyer, you couldn't close anyway. But if you say by hopefully seller lawyer or buyer lawyer letter, we are ready, willing, and able to close, that makes your case better if down the road you're having an argument. So file a caveat, make sure you have a good, solid, signed contract, make sure you meet all the dates in the contract, both for condition removal and be ready, willing, and able to close on the closing day, and make sure the seller knows about that. And in the end, folks, you can probably force the seller. So I'm hoping that's some comfort for you, but do follow those other bits of coaching. Anything else there, Andrea, from your experience as an investor and a realtor in the trenches?
Yeah, there's two other quick things. One, at least in the province of Alberta, the seller has to provide 10 clear days for you to look at the real property report. So if they haven't provided you those 10 clear days to look at it, as a buyer, you could ask technically for an extension because they haven't held up their end of the contract. And then the other thing to consider is, especially if you're dealing with a for sale by owner, if you feel that they are, I'll say kindly, of the senior generation.
Yes.
And if they don't really understand market values or what they're doing, you may want to ask them to bring somebody with them to sign the contract, whether that's a grown child or somebody that they know, like, and trust, or somebody that's a little more savvy. Because the last thing we want to do is take the little old lady down the street for a ride and her just not be cognizant, right?
Yes. And so firstly, from a how we treat people perspective, because I know Andrea does, and we do, and we teach in all our focus workshops that we never take advantage of people, and we always play for win-win. So if you realize that the little old lady really didn't have a clue, I mean, folks, don't take advantage. Firstly, it's not fair. It's not what we teach. It's not what we believe in. And it certainly gives the seller a chance to raise the "I didn't know what I was doing and I'm a little old lady" defense. And that's very effective. When some little old lady's in front of a judge saying, basically, "They scammed me. I had no idea. I thought it was worth what I paid back in 1949. The judge will pretty quickly just put the kibosh on your transaction. So both from a fairness perspective and from a protecting yourself perspective, having a family member come along, an adult child, in some way, shape, or form, don't let anybody point at you to say you took advantage, because that's a defense for a seller, for sure. So that was good, Andrea. That was good ones.
One other thing that I thought of, if you're dealing with somebody who is in charge of an estate sale, they need to actually prove they have the right to sell it. And so it's important to see some sort of legal document that says that that person's been appointed as the executor or the trustee or whatever it is, because if they don't have the legal right to sell it, you're going to be hooped, right? So it's a little bit of extra due diligence to do, and most people don't even know. So, for example, I ran across a client who wanted to list a property for sale. She'd never owned a home. She'd never bought a home. She inherited her mom's home, or the estate inherited the mom's home, and she was appointed. So, I had to ask her for that legal document that gives me the right to actually represent her in the estate and listing her property for sale. So that's something else to keep in mind.
Yeah, any estates can be tricky. That's good coaching on Andrea's part. If you're running into an estate seller, there's a number of questions. Talk to your knowledgeable realtor, talk to me, talk to your own lawyer about how to make sure that if you're dealing with an estate, you actually are going to be able to buy, and probably buy in a timely way. So,
yes.
All right. Well, those are my three things I was going to talk about today. I had as backup, just in case we couldn't talk about those things, a couple of other tales from the trenches. One called Corporate Matters Matter, which is about why it's important to keep your corporate filings up to date and how that works in real estate. And another really interesting one called Lead Isn't Dead, all about lead in pipes. Well, we're going to save those for another day, because we're finished today. Andrea, so it's always so much fun having you on, and I always appreciate your insights and your practical, knowledgeable things that you help us all out with. So thank you very much for showing up and talking to everybody.
Thanks for having me.
All right. So I think we're done for today, Donna, unless there's other major questions. So folks, that's today's Monday main event. Everybody can go watch the hockey game or go out in their garden, or think about, in Alberta, being on a patio tomorrow and having some foamy beverage. Good night, everybody.
Good night.